Hello and thank you for watching New Money Happiness, a channel that is devoted to folks who want to live a good life and who understand that money and money management have a significant impact on our personal experiences. Please take a moment to like, subscribe, and comment. So my name is Armando Roggio, and in this video, I'm going to give you 5 tips for avoiding an IRS audit. An IRS audit is simply a review or examination of your tax return in order for the IRS to determine if your deductions and income are correct. Now, some of these can happen because of an error in your actual tax return. Others are the result of an algorithm. The IRS will compare your tax return to the norm or standard and use a statistical model to determine if you should be audited. According to the IRS Data Book for the fiscal year 2019, just 0.6% of individual tax returns were audited between the tax years of 2010 and 2018. And in January 2020, USA Today reported that audits had been conducted on just 0.45% of individual returns for the prior year. Now, businesses are a little bit more likely to be audited, with 0.97% or just under 1% of corporations receiving a review, again, during the tax years of 2010 to 2018. Now, some experts expect the audit rate to be lower for the 2020 tax year because of all of the extra work the IRS had to do related to the pandemic and the various stimulus checks. Now, for the fiscal year 2019, there were more than 700,000 audits. So while the percentage is small, the number is fairly high. An IRS audit doesn't necessarily mean that there's anything wrong with your tax return. Again, a lot of these are being audited because of a statistical model. Nonetheless, an IRS audit does cause you some discomfort, if you will. First, you're going to have to dig around for receipts so that you can verify your income or your deductions. Second, it may cost you a little bit more money. Over the last few years, the IRS has collected more than $80 billion as the result of audits and similar actions. And finally, there are some cases where a mistake can be criminal. This is rare. The IRS conducted about 2,000 criminal cases last year and won about 90% of them. Although the chances of an audit are low, there is no guarantee that you won't be audited in any given tax year. There is some good news though. Since many audits begin because of an algorithm, there are some things you can do to perhaps lower your chance of receiving an IRS audit. Report all of your income. The IRS gets copies of W-2 forms and 1099 forms, so forgetting to report everything is a mistake. File on time. Not filing a tax return is a good way to get the IRS's attention. It is better to file on time even if you need to set up payment arrangements. While you want to take all of the deductions you are allowed, listing lots of them can be a red flag. For example, many experts suggest that deducting 100% of a vehicle for business use is a common red flag. Whether you do your own taxes or use an accountant, filing electronically reduces the number of errors significantly. Recently, the error rate for IRS paper returns was at about 21%, while the error rate for electronics returns was half of 1%. Although math errors don't always lead to a formal audit, they can trigger a review. Also, some tax experts believe that having too many round numbers can trigger an audit, so double check your arithmetic. So there you have it, 5 tips for avoiding an IRS audit. I hope you found this video useful and helpful and perhaps even a little bit entertaining. Please take a moment to like, subscribe, and comment. Take care.